So, good evening, everyone. Let me formally welcome you all to another session of financial advice, sponsored and brought to you by Ethica Worklife. Um Today, we know that all of us have always been interested in investments, and based on the goals of ours in our life, we don't know how much to invest and how to invest. So, this is a very, very interesting and practical topic that we are going to be handling today. And for that, I have our expert, Mr. Rajesh Jain, to do that. He's a very senior financial advisor. So, without waiting any further, let me bring on Rajesh. Rajesh, please take it over.
Good evening. Thanks, Amina. Good evening, all. Am I loud and clear? If it is loud, please type loud and clear. Thank you. So let's start. So before we begin, uh, let me just tell a brief about myself. I'm Rajesh Jain. Basically, in terms of qualification, I'm a commerce graduate. I've done my law. I've done my law from Andhra University, Vijayawada. I did my company secretaryship. I'm a fellow company secretary. And I did my executive program in finance from IIM Kozhikode. I started my career as an advocate in High Court of Hyderabad. That it was a joint High Court at that point of time. High Court of AP and Telangana, I would say more. Then I completed my CS and switched on to my career as a company secretary. I worked in various corporates like Surana Group, CK Birla Group, and then worked as a CFO in a MNC called Harman Group. And finally, in 2018, I came into completely financial services sector by joining Weltree Group. I'm currently a promoter and I'm a managing director in a Weltree Group. I'm personally a SEBI registered equity research analyst, and I'm AMFI registered mutual fund advisor and IRDA registered insurance planner. I've personally trained in the last 3 years several MBA students, graduates, corporate employees in terms of financial planning, insurance, mutual fund, and stock markets, and have been had a privilege to have a lot of high-profile students as well, including one of a sitting judge of High Court. So this is about me. So let's straight away set our agenda for the day. So today, as you know, the topic is how to do a goal-based financial planning. So we would be first understanding what is a goal-based financial planning or goal-based investing. Like you know about investing, but how can you make your investing goal-based? How to determine your financial goals, personal financial goals? What are the various factors that you should consider while determining your personal financial goals? What are the various avenues available for you for investment? And finally, how can you define a system to track your goals and trying to see that where you are? So before we just set with our agenda formally, I would like to mention you all that during this session, I would prefer it to be an interactive session, and the mode of interaction would be the chat window. So any responses, any queries, or if you want anything to be repeated, or if something is not very clear, you can kindly feel free to post it into the chat window, and I would uh, respond to your queries immediately. So let's straightway get into the agenda. What is goal-based investing? So normally, see, investing, I always feel it's like a journey. So when we in our life also, when we go on to a journey, what we do normally, so if I have to go for uh, travel for a day or for two or for a week, what we normally do, we always have a complete plan in place. We first start with where we want to go, why we want to go, in how much time we want to go, isn't it? When we start any journey, there is a few things which we always keep in mind, and initiate it. And similarly, when it comes to investing also, there are two kinds of investing. One thing is ad hoc investing, that every month, whatever I earn, after my earning, whatever I'm able to save, I will just save. That is an ad hoc investment. That जितना भी रहा, जितना भी मिलेगा उतना इन्वेस्ट कर दिया. So it's more of depending on my ifs and buts, my own discretion. The second way is that I have a predetermined goal saying that in the next 3 years, I want to earn 3 lakhs, or next 3 years, I want to create a saving of 10 lakhs. Now, when we start with that goal, and when then you determine, okay, if I need to achieve 10 lakhs in 3 years, how much I have to start saving on monthly basis, where I have to start saving so that my savings in turn after 3 years create a corpus of 10 lakhs for me. This kind of investing, a focused, a determined, and objective based investing is called goal based investing. Now, why this kind of investing is required? Because in life, we have got several goals, and every goal has got a different time period, isn't it? Now, tell me a few of the goals which you have in your life. Any one of you, please post it in your chat window. That what is your goal? Like I want to give a good education to my child, or I want to buy a car for myself, buy a home for myself. What are your goals? What are your life financial goals? And when you want to achieve it? Like I would say, I want to buy a house by 2024. So that's my financial goal. Okay, Surendra, to free myself from home loan. Okay, Balamchari ji, okay, buy a home for myself. Amrita ji, yeah. Amrita ji, you have put your response to me privately. I would prefer it to be posted generally to everyone so that everyone can see. Buy a home in 3 years. Yeah, that's much more precise. Buy a home in 3 years. Okay. Now, when you say buy a home in 3 years, if I say I want to buy a home by 2024, a home costing 50 lakhs, will it be much more specific? So whenever you are planning, whenever you speak about your goal, try to be much more specific. We speak about smart goals, no? So the first S for a smart goal is being specific. Being specific about what, how much, and by when. Now, if you see, you will be having now, everyone has just posted one financial goal. Buy your home in 3 years. Now, after 3 years, what? Now you have bought a home. Amrita ji, you have bought a home in 3 years. Balamchari ji, you have bought a home. Surendra ji, you have been freed of your home loan. After that, what? After that, it would be obviously your kids' education, your own retirement plan. So normally what happens, our approach is, we have got different financial goals with different tenures. One in 3 years, one coming in 10 years, one coming after 15 years. And as a human tendency, we always tend to focus on the goal that is immediate. What is immediately next that I need to tackle? So our focus, our energies are always directed towards that short-term goal, and somewhere the long-term goal, which is there, like my kids' education after 10 years and my own retirement after 20 years, take a backseat. And by the time we discover that, okay, I have not planned for my retirement, I have not planned for my kids' education, you have already lost a considerable time. So when you do a goal-based investing, what happens is you try to plan your investments in such a way that each investment of yours is distributed towards various goals. That is, if I'm investing say 50,000 per month, I would say 30,000 is going towards my home, which I need to buy in next 3 years. 10,000 is for my kids' education, and 10,000 is for my own retirement. So I know I've created different kitties. So this is why a goal-based investing is required. And how to create it? How can you create a goal-based investing? This is what we will talk about in today's session. So first and foremost, for creating a goal-based investing system, you need to first write down each and every financial goal of yours. And this is a suggested format. You can have your own format. This is a format that we are suggesting to you, that you can create a goal sheet. You can take a screenshot or a photo of this, and I would request each and every one of you that during this weekend, please take out your time and fill this goal sheet. That what are your financial goals in life? These are the few suggested one. Like normally, most of us have, like higher education. It be about myself, my spouse, my child. Now, child also, if I have two child, like I have got two kids. So my two kids, obviously, I cannot say that both my kids 50 lakhs. No, it would be my kid one, kid two, because my kid one would be say 10 years and kid two is 13 years. So obviously, there is a time lag. So you need to segregate that. You cannot have both the kids together. Similarly, marriage, plan for the marriage expenditure. Retirement for your own self, for your spouse, for your parents. Normally, we tend to forget that our parents would retire, and after they retire, if they don't have a retirement corpus, it will become your responsibility to fund your parents. Remember, less than 4% of the Indians, less than 4% of the Indians plan for the retirement before they turn 45. Only less than 4%. And for 70% of the Indians, their retirement planning is their kids. They spend their entire earning, their entire livelihood, what they have earned for the kids' future, and finally for the retirement, they are only dependent on their kids. So you will have to even plan for your parents, your spouse, your father, your parents-in-law, because nowadays we are all like one kid or two kids. So obviously, if tomorrow your wife, parents, they are only like only single kid or maybe two kids, both daughters. Like I'm a father of two daughters. So if something happens to me, my son-in-law would have to take care. So think practically. So keep activating your thoughts on what could be the various financial expenditures that may come up in your life by the time you retire. And then write down each and every goal, put them on priorities, that which one is the highest priority, which one is second, which one is third, give them a ranking. Then what you need to do is write down the current cost. Okay, years to go, expected future cost, and amount you have today. Now, how you have to calculate this? I would say, what are all the factors that you need to consider? Is first thing is, what is the current cost of the goal? Like example, like today you say, Amrita ji, you said I want to buy a home in 3 years. Now, what is the current cost of a home that you are intending? If it is say about 50 lakhs, now 50 lakhs is the current cost of the goal. Then how many years you have to achieve? You have 3 years to achieve, isn't it? Then expected inflation during this tenure. So today, if I'm planning for a 50 lakhs house, after 3 years, will the same house come at 50 lakhs only? Will it be at 50 lakhs after 3 years? No, it would not be. There would be certain inflationary cost. Okay. In real estate, obviously, it doesn't work on inflation. It works on certain other parameters as well. But what could be the tentative cost? Like 50 lakhs, normally year on year, the property prices on an average, barring for the fluctuations we have in between, they vary between 8 to 10%. So if I'm taking a 10% inflation, this 50 lakhs would cost me somewhere around 65 lakhs, isn't it, after 3 years? Yes. So what is my future cost of the goal? So I need to target for 65 lakhs and not 50 lakhs. So my future cost of the goal is going to be 65 lakhs based on the total inflation. Now, for 65 lakhs, what you need to first see is what are your accumulated savings. So I want to buy a house for 65 lakhs. My current accumulated savings is 25 lakhs. Now, what is the shortfall? The shortfall is 40 lakhs. Now, how would I fund this 40 lakhs is what I need to look at. Now, this 40 lakhs, how I can fund? Can I completely uh, create this 40 lakhs corpus from my savings? Most likely, The answer would be no, isn't it? Then what I need to plan that anyway, Rajesh, I'm planning to take a home loan. So at that time, whatever it is, I would look at it. That is how most of us think. But no, that is not the way to think about. What you can think about is, okay, today I have a gap 40 lakhs, 25 lakhs I have in hand. I want to buy a home of 65 lakhs. There's a gap of 40 lakhs. Now, in the next 3 years, what is the maximum potential I have to create a savings for my home? I can say, okay, 5 lakhs, 6 lakhs, so that the amount of my home loan can reduce. Now, in this, most of the times, what we tend to ignore is, since we are speaking about home, let me tell you, the furniture cost, the registration cost, your housewarming ceremony cost. There are a lot of other added expenditure, not just to this. And all this put together will increase your total cost of home to at least 80 to 90 lakhs, isn't it? All these expenditures are there. But normally, what we tend to do when we plan, we only plan for this 65 lakhs or 70 lakhs. We don't plan for the other things. And then we end up stretching out ourselves for unplanned expenditure. Whereas expenditure were always there, we could have foreseen it. So planning is all about foreseeing what can be the various costs that you need to incur. So you have to always foresee. Now, here, what you need to see is, okay, what are the modes of investment that I have for investing for this next 3 years? Now, 3 years is a very small tenure, isn't it? So where would you invest? Now you have 25 lakhs in hand. This 25 lakhs plus another 10 lakhs you may save from your earnings in the next 3 years, that is 35 lakhs. Now, where you say you should invest, you tell me where you think you should start investing. Any suggestions? Anything that you have in mind? Should I invest into stock market? Because stock market is booming. People say in stock market you can create an earnings of 15-20% a year, 25% a year. So should I invest into stock market by this 25 lakhs, so that this 25 lakhs I can make it 30, 35 lakhs or 40 lakhs by the end of 3 years? What do you say? Where should I invest? Amritaji, we are discussing about investing the amount for buying your home only. So for the next 3 years, if you are investing into real estate, planning that I would buy a plot now, and after 3 years, I will sell this plot to buy a home. Is that your planning? What you mean to say? Okay. If that is the planning, then what you need to look at is it really safe? Because after 3 years, if you want to sell your plot, can you liquidate it without hassles? Is real estate liquid? That is, today I want to sell and within a week I can encash it. Can you sell any plot within just a week that you have finalized a home, you want to book a home, and then you go out into the market and want to sell it? No, you cannot. Similarly, the stock market in short term is always volatile. Now, if you invest into the stock market, what happens? Tomorrow, after 3 years exactly, when you are planning to buy a home or you are looking out, there is a stock market crash all of a sudden. What will you do? Will you take a loss and cash the amount and sell it? No. This is where you need to look at that. Your investment avenue should be in proportion to your investment tenure. That what is your investment tenure and how much? So what I would do is, I would basically this 25 lakhs, I would either put it into fixed deposit or maybe a debt mutual fund, which would be giving me a slightly higher return, because fixed deposit currently give how much? About 5.5% return, isn't it? So instead of putting into a fixed deposit, I can put it into a short-term debt fund. A short-term debt fund would be giving somewhere around 7 to 8% return to me. So I would can put that 25 lakhs into my short-term debt fund, and then what I can do is, monthly I have a target saying that I want to save about 30,000 per month. So this 30,000 means how much? In the next 3 years, I would be accumulating somewhere around 10 lakhs, isn't it? So what I can do is, either I can do this 30,000 as an SIP into a debt fund, one option. Second, my personal favorite is what we South Indians like. going for a chit. Go for a monthly chit of 30,000 with a chit period of 3 years, so that you, in the next 3 years, like you plan for 3 years, but after 2 years only you may come across some good property and you are liking it and you want to buy. So chit gives you flexibility that you can take your money whenever you have a requirement. So that is another option. So these are the two better options that you can always look for. So with this, what will be happening? Your principal would be secured first. Your returns would be more or less consistent and predictable. You can predict that what could be your returns. You are not left to volatile market, or you are not left to any ifs and buts. Third, your investment is liquid. That is, you can encash your investment whenever you want. And fourth is that, is it in line with your requirement? So obviously I need something that gives me money in next 3 years and give me a decent return in the next 3 years. So anything that can be giving you a very good return, a consistent return at the same time with a lower risk, would always be suiting your requirement, isn't it? So this is how you need to determine each and every goal, and for that every goal you need to have a different approach for your investment. Just go following a blind rule. Most of us know, we have a very, uh, I would say, biased or a partial view for investment. If I like stock market, I would invest every damn money into only into stock market. Every damn money. Whether I have need in next 1 year, that also I will invest in stock market. I need after 3 years, that also I will invest into stock market. I need after 10 years, that also I will invest into stock market. Someone who is very risk averse, first play safe, no risk. What he will do? He will start investing everything into FD. Even amount which needs after 10 years, 15 years, where he can even take some risk, certain reasonable risk, even that also he will start investing only into FD. Few people crazy about real estate. So for every money they will put into real estate. And I have witnessed many of my friends who, they have a real estate worth of crores, but whenever they get some emergency need of even 10 to 15 lakhs, they need to run from pillar to post to arrange for the 10 to 15 lakhs, because the liquidity position is very weak. I hope you all know what liquidity means. Liquidity means anything that can be converted into money with minimal efforts. Like cash, it's cash only. Gold, you can go and sell the gold into the market and convert it into cash. Okay, your debt funds, you can just redeem and within 2 days it will get into your account. Your stock market, your shares, anytime you want to sell, you can just sell, and with next 2 days the amount would be there in your account. So this is what liquidity means. So liquidity factor also needs to be taken care of. So let's look at this with one example. I already took up one example for you with regard to what you shared, but much more a longer example. So for example, children future planning. Now, children future planning is one key factor which each one of us. So by the way, how many of you are parents? How many of you have kids? If you have kids, type how many kids you have and what are their ages. Like I'm a father of two daughters. My elder daughter Naina is 13 years and younger one Anchal is 11 years. Okay, I see no parents here. Fine. Yeah. So when it comes to kids, basically there are four things that we need to plan. One thing is for the school fees. So school fees are basically paid from your regular monthly earnings. So how much of the proportion will of your monthly earnings will get a portion for the kid school fees, that you need to consider. Second is for the higher education. The higher education in the sense, in terms of their engineering, their degree, their higher education. How much money that it would cost. The core curricular activities. If your kids have, like my daughter love singing, my elder one loves dancing. So for their co-curricular activities, we want something. There are expensive co-curricular activities for that. And finally, the kids' weddings. As I told you, I'm a father of two daughters. This is my younger daughter, Anchal. She's very naughty. and my elder daughter Naina. She's actually a female version of mine. Many people say she looks very similar to me. So my younger one Achal, she aspires to be a singer and a teacher, and my elder one, she aspires to be an IAS officer, and also she wants to do an MBA. Now for Anchal, she wants to be a singer and teacher, so obviously it's not going to be costing me much. So what I need to do is I need to plan for my elder one more. My elder one wants to do an MBA, and also she wants to do an IAS. So I need to first start planning for the funding for her MBA, and also I need to plan funding for her IAS coaching, because even after her graduation and everything, she would be at least like 2 years or 3 years. She would be only studying, focusing on her studies or study expenditure, lodging, boarding expenditure, all those things I need to fund. So this is what I need to look into. Now, this is a chart for how much you would require. So this is a goal amount required. So say for example, there are 5 years to go for a goal. So you currently requires 20 lakh rupees. Then this 20 lakhs rupees after 5 years, that is future value of the goal, considering an inflation of 10%, would be about 32 lakhs 21,000. Now to achieve this 32 lakhs, what I would require is to save 39,440 rupees every month for the next 5 years. Similarly, if it is 20 lakhs in 10 years, so 20 lakhs today, but I want to spend after 10 years. So that means it would cost me 51 lakhs and not 32 lakhs. So I need to plan for 51 lakhs, not 32 lakhs. But for planning for this 52 lakhs, how much I need to invest? I need to only invest 22,550 and not 39,440. So that is why I say, if you start planning for your long term goals now itself, then the burden that you would be there on you would be lesser. But the shorter the goal, like say for example 60 lakhs, let's go for 60 lakhs. Now if I have to need something, like I want to send my daughter for doing an MBA out of India, abroad, how much it would cost? It would cost me about 50 to 60 lakhs. Now if it is in next 5 years, how much I need to save? I need to save 1 lakh 18,000 per month. But the same thing, if I'm planning 15 years in advance, how much I need to save? Only one fourth of it. Sorry, one third of it. That is 44,000. So the earlier you plan, the better it would be. And this investment amount is assuming a return of 12%. So what does it means? That my daughter Naina, who's 13 years old, she wants to do MBA. So how much the MBA would cost? So when first thing is, how much time I have? I have a time of 9 years. Now, how I calculated 9 years? Because currently she is in 8th, 9th and 10th for her higher education, then 5 years for her degree graduation, that is 7 years, and after that 2 years for her work experience. So 9 years. That is how I calculated. So 9 to 10 years is the period when she would be going for an MBA. And if she does an MBA in India today, it would cost somewhere around 20 to 25 lakhs, including all the other expenditure that I need to fund. And if I'm speaking about the topmost premium, because as a parent, we always pre, uh, aspire to make our kids study into the topmost educational institutions, isn't it? But yes, things may not be in our favor, and then we may slightly compromise, we may go for something else. But at least our aspirations is always that we want to make our kids study into the best of the schools, isn't it? So this is the cost that I have taken. So let's say after 10 9 years, I'm looking her to join only in India. Mera Bharat Mahan. I don't want to send her out of India. Okay. So because today only in India we have got world class education institutions, and obviously in next 10 years, I anticipate that our education levels and our institutions would really become truly global, world class. Okay. So with 10% inflation, it would cost me somewhere around 60 lakhs. Now, if I have to plan this, I have got two options how I can achieve this 60 lakhs. Option one is either I start investing 31,000 every month and consistently I save it for next 9 years. And then this will become somewhere around 60 lakhs at a return of 12%. Okay, I repeat, it is at a return of 12%. Now, I say, okay, 31,500 as on date, I cannot invest. Then Rajesh, what is the other option I have? Can I have something at a lower? Yes. Since we are planning early, there is another option too. What it is? I start with 22,500 and then every year keep on adding 10%. That is, I start with 22,500 and next year I make it 25,000. Add 10%. So adding 10% year on year, would it be difficult? So every year I would be getting increment if I'm a salaried employee. If I'm a businessman, my obviously I expect my business to grow. So adding 10% year on year, that is incremental investing, will it be difficult? I don't think it would be difficult. So that would be much more easier option. So both the options will take you to 60 lakhs only. Only thing is option one, you start with very higher burden. Option two, you start with a lighter burden and keep on increasing your weight. Okay. So which one would you prefer? If you are in my place, which option you would prefer? You would prefer an option A or option B? Option B. Okay. Now, for getting this, where you need to invest 12% return. Now, tell me, if I put it into FD, if I put this money, start I start a recurring deposit, a recurring fixed deposit of 22,500 every month. Will I be able to achieve my goal? Will I be able to achieve my goal? No, I would not be, because FDs give me somewhere around 5.5 to 6% return. Okay, optimistically I take 6% return, long-term recurring deposit. I need to invest 42,000 per month for the next 9 years instead of 31,500 per month. And remember, as I told, investing is a journey. Okay, investing is a journey. So when you are planning for a journey based on the goal, that is where you want to go and in how much time you want to go, you always choose your vehicle, isn't it? If I need to go to Mumbai, and I want to reach only in 2 hours, what I would take? I would take an aeroplane. But if I'm fine reaching the next day morning, I would take a train or maybe by a bus, isn't it? The same way, the faster you want to go and the longer you want to go, you need to choose your investment vehicle accordingly. And your investment avenue is the vehicle you choose to do your journey. And this is where my recommendation for what kind of investment vehicle you can choose for various investment tenures as well as your expected rate of return. So if you want to save something, if you need money, say for example, you want to save something for just for short term, you have got some bonus, you got a bonus of 2 lakhs, 3 lakhs, and you don't know where to invest. And by the time you're exploring your investment options, you can either keep it in your savings account, which will give you 3.5% return, or you can put it into liquid funds, which would give you somewhere around 4 to 4.5% return. But if your investment tenure is between 1 to 12 months, that is, you need some money after 3 months, after 4 months, okay, after 3 to 4 months, then you can invest into either fixed deposit of 3 months, or you can put into an ultra short term debt fund. Now, sorry, the rate of returns is slightly higher because currently it's dropped down. If I'm investing into fixed deposits, for example, for 12 months, the current rate of return is only 4.5%, and ultra short term debt fund, which is for the next 6 months to 12 months, would give you somewhere around 6% return. So ultra short term is a debt fund, debt mutual funds. So mutual fund doesn't mean only equities. There are even debt funds options into mutual funds, which you should know. And if I've already taken a session on mutual funds, but if any one of you want to know more about mutual funds, I can obviously, if you're part of the WhatsApp group, you can access to the videos, or I can even share certain other videos. Okay. Then, if you want to invest for 1 to 3 years, 1 to 3 years, this is what I was talking about when we were speaking about Amrita's home loan. Home. That is, if she want to invest for the next 3 years, what I suggested her to go for an organized chit, because chit gives the highest return for short term missing, because obviously chits are slightly riskier, but they have a potential to give about 11 to 12% return, whereas any other investment option would give you slightly lesser. So my personal preference would be an organized chit, and I would say organized chit. Don't go with the chit of your Attaya, Babai, Pinni. No, मेरा चाचा का चिट है नहीं. I would always suggest you to go with an organized chit. You may get 1 to 2% slightly lesser, but since you are all salaried people, everything सब कुछ white में मिलता है, black में कुछ नहीं है. Okay, so go for an organized chit. हाँ, if you want something in cash, then your local chit, that's your option. Okay, I would not comment on that. Yeah. Then if your investment tenure is 3 to 5 years, then you can go for balance funds or short-term debt fund. And if your investment tenure is more than 5 years, only then you should take an exposure to equity. Whether you are directly investing into stock market, or you are going for a mutual fund, equity mutual fund. In either of the case, if you want to take an exposure to the stock market, equities, you should do it only if you know that you will not require this money for at least next 5 years, because 5 years is a period where the possibility of your investment into equities becoming negative is low. It's a probability. See, if I speak about probability, the probability of you losing money into equities in the first 1 year is as high as 96%. That is, the first 1 year, 96% of the chance, there's a 96% chance that if you are investing 1 lakh, the amount can become less than 1 lakh. The same thing, if I'm doing after 5 years, the probability becomes less than 0.5%. 0.5% of the time till date. And if you take up an extended period, anytime if you see stock market in less than 5 years, rarely it has given a negative return. And if you see 10 years, it has never given a negative return. So people say, yes, stock market is risky. Stock market is risky if you don't invest it for a longer tenure, because in short term it is volatile, and the volatility makes it very high risky. So you take an exposure into stock market only if you want to invest for more than 5 years. Now, when it comes to real estate, you should not invest your money into real estate unless you know that you would not require that money at least for the next 10 years. Only if you have the holding capacity for 10 years, only then you should invest into real estate. Am I clear? Any doubts on this? Anyone having any doubts on this? So this is one of the critical sheets that we have.
Hey, hi Rajesh. Can you just give a intro on organized sheets? I think I missed that part. Probably, I'm not aware of it.
Organized sheet.
Yes.
Okay. You are aware of cheat funds, no?
Not exactly.
Okay. Basically, I'm surprised actually, because in South India, cheats is one of a cheaty, what we say here in locally.
Actually, I'm not local.
Yeah, that is what. So, Keshavji, I understand you are from actually North India. So in North India, chit is not a very popular option. In South India, we have got chits. In North India, I just I'm not able to recall the exact usage of the term. But basically, what it happens is chit is basically a group of people coming together. Okay, they every month. How it works is chit fund. How it works is, say for example, I become a part of a group where they're investing 20,000 per month for the next 15 months. So what would be the total value of the chit? It would become 10 lakhs, 20,000 into 50 months. Okay, and there would be about 50 members part of that chit fund. So this is how this chit will go. Now, first year month, when everyone is depositing this 20,000, this entire 10 lakhs is auctioned. Now, in auction, what will happen is, person who is needing these funds, so he will say, I'm ready to take only 9 lakhs. Another person would say, I'm ready to take only 8.5 lakhs. Another person would say, I'm ready to take 8.2 lakhs. So the lowest person who bids for the lowest withdrawal will get that amount. So if someone bids for 8.2 lakhs out of 10 lakhs, this 2.8 lakhs is actually an interest or a premium that is charged. And this 2.8 lakhs is again distributed among all the members, And finally, this 2.8 lakhs is the return that they get. So 2.8 lakhs divided by 50, how much it becomes? Somewhere around, I think 13, sorry. Somewhere around. So instead of 20,000, you would be required to pay only like 11 to 12,000, not more than that. So this is how the chit works. Okay. Now, since I've told you, now you start, you would be having some South Indian friends in your office, some South Indian colleagues. Okay. If you talk to them, you would find not one, you would find so many experts on this chit in and
Okay.
around you. Okay.
I think you were referring to committee, committee probably what we call over there.
Maybe I'm not sure what we call there.
But yeah,
But yes,
it's in a way is like a organized one, like a
organizations like Margadarshi chit funds are there. Obviously, I'm not promoting Margadarshi. That is the name that came first to the mind. Okay, there are a lot of organized chit funds. Like officially they are registered, so they take money officially. They even pay money officially to you to your bank account, and even when they are paying, they take guarantees and everything. Okay, unorganized chits are like someone in and around your locality. They make a group of 15, 20 known people, and then they run the chit. But in unorganized chit, what is the risk is if someone like out of 20 people, if even one defaults, the person may raise his hand saying that boss, someone has defaulted, I cannot pay you. Okay. But in organized chits, what happens is they take slightly higher premium, but they take the risk of defaults. So that is why I suggest organized chits, because organized chits may be giving you 1 or 2% lower return, but that would be better. Amritaji, how to approach organized chit fund group is there would be a lot of chit fund agents, chit agents. So in fact, if you want, I can actually refer to you, but offline, not here. This is not the platform for me to refer any of them. Okay. Yeah. Now, Balam Rai Chari, yeah, Balaram Chari. Okay, sorry to get your name wrong. Okay, Balaram Chari garu, డెట్ ఫండ్స్ ఏంటంటే మనం నార్మల్గా అప్పిస్తాం కదా వేరే వాళ్ళకి. సేమ్ వే when we invest into mutual funds, they also extend it to other companies in the form of debt. Okay. So these funds normally, what these debt funds do is they invest your money into various companies, corporate bonds, commercial papers, or government securities. So these are debt funds. So debt funds basically come with slightly lower risk and they give better return than your bank fixed deposit. At the end of the day, even banks, what they do, what you do fixed deposit, bank go and give loans to the other investors, other companies. Now this company can be Nirav Modi, can be Vijay Mallya, or can be a person like you and me. Okay, a person like you and me will not default, but that kind of persons may default. Okay, so there that risk is always there. We feel that bank fixed deposits are the safer. No, they are not safe. Luckily in India, till now, government has not allowed any of the major banks to fail. So that's the reason we have not impacted it. But if you see in US in 2009, when there was a recession and crash, many big banks went out and their fixed deposits, they defaulted. Okay. So going future, that can happen. So fixed deposits are not safe. Yes, similarly, debt funds are equal to fixed deposits, but they give you higher returns. Now, if Balam Rai, are you part of our WhatsApp group? If you're not part of the WhatsApp group, Hi-Fi group, you can be part of that group. I can share a couple of videos on debt funds where you can go through it. You will understand what actually debt fund is in detail. Okay. Anyway, we already had a session, even I think on Samina ji, I think we have our Ethica Work Life YouTube channel also. No?
Yes. In YouTube channel, you will be all finding all the
that
sessions.
link can be posted into the WhatsApp group.
Yes.
Yeah. So now, how can you design a system to track your goal? Okay. The first thing is, please have a written financial goals. Written financial goal can be any structure the way you want. I already gave you a structure how you can create, so you can improvise on. That is only a suggested format. So have a written financial goal, very clear, and think precisely. As I told you when we went through it, I told you what all things you need to look at, what all goals that you need to, because many things you may not anticipate. So try to anticipate what all various expenditures or various big expenditures that can come in future. Even like you want to go out for a world tour, that is also a major financial goal, because world tour comes with big uh, ticket. Okay, make a goal specific investment plan. So for every goal you should have a separate investment plan. So say for example, if I'm doing an SIP of 30,000, so this 30,000 should be demarcated clearly, that out of this 30,000, how much amount is for what goal. And why this is required is so that I know that tomorrow when that expenditure comes, how much amount or which kitty I should break. It is like having multiple piggy banks. Like this piggy bank is for my cycle. I want to buy a cycle. This piggy bank is for my birthday party. So I will break this piggy bank only when my birthday party comes. This piggy bank is for my brother's birthday. So I want to give a gift for my brother. This is how we could have planned in. We could actually teach our kids also to start saving in this manner. Okay. In fact, that would be the better way. If we start training our kids to start investing in this manner, they will also learn how to do this. No, it is not a fixed return, but still it is safer, and it always gives, your debt funds always give return higher than your fixed deposit. Like fixed deposit earlier, they used to give 8 to 9%, they are giving 5.5%. So when the fixed deposit used to give 8%, the debt fund used to give 9.5 to 10%. Today, when the fixed deposits are giving 5.5% return, the debt funds are giving somewhere around 7 to 7.5% return. So in a long term, if you see, except if you go for, so in debt funds also you need to see there are various risk categories. There are slightly riskier debt funds which can give 10 to 11%. Yes, but there are chances of default. But there are lower debt funds which invest only in high grade companies, like credit worthy companies, companies which have got very good investment rating, or they invest into government treasury bonds. So where the chance of default is low. So you need to be very careful in which debt fund again you are investing. So people say no, कि mutual fund sahi hai. Yes, boss, mutual fund sahi hai. But out of so many mutual fund schemes that you have, कौन सा सही है is something very precisely you need to look into. And once you have created your goal specific investment plan, please review your goal once in 6 months. That all your goals once in 6 months, so that you remember, boss, okay, these are my goals. I need to start planning. This goal I have not planned, so I need to start investing for this goal. So every 6 months, you please review your goals. Every once in a year, you review your investments, how your investments are performing. Because I've come across many of my clients who, like, they have been investing for the last 6 years, 7 years, but they not even reviewed it. They don't know what is the position. They only review it when they sit together, when they come to me for a financial planning session or a proper financial planning. Then when we start reviewing, only then they realize, okay, I didn't make much return into this. So start reviewing your investments once in a year, and increase your investments as your income increases. So every year when your increment comes, ensure that 30 to 40% of your increment goes for your incremental savings and not just for enhancing your lifestyle. Because what happens is most of the time before the increment comes or before the bonus comes, we have already planned the expenditure, which is either equivalent to the increment or bonus, or at times even more than that. Okay. So always plan for 30 to 40% of your increment or bonus as an additional savings. And any deviations in your plan, please review it holistically. Just because one thing has deviated doesn't mean that other things will not impact. So again, you review your entire financial goals. You will have to see that, okay, what adjustments you have to do in your goals. And finally, please keep a track of your financial goals and your investments. So how can we continue to support is, we can, if you write down your financial goals and all, I can obviously help you and try to create a holistic financial plan for you, depending on your annual saving potential, what are your key financial goals, then categorize them with priority and timelines. So if you come to us with that, then we can always try to guide you in curating a proper investment solution for it, with combination of various investment options, insurance, mutual fund, debt, real estate, equity, depending on your risk appetite and your choice. Now, these are the glimpses of the various training programs. As I said, no, that We organize a lot of training programs, both financial planning, stock market, investments, everything, even mutual funds. So uh, this is our in-house training room. This is a training done into a hotel. So a lot of training programs that we organize. We are students of St. Anne's Women's College. They are MBA finance students. Yeah. So we request each one of you to kindly join the WhatsApp group, the Financial Hi-Fi Club. Uh, can you post the link for that WhatsApp group to join?
I have already posted it, sir.
Please post it again now.
Yeah, sure.
Okay. So I request you to please, if you have your mobiles now, whatever it is, whether you are logging in from your desktops, please click that link and join that group so that you will be updated for all your things. And there, any of your queries also with regard to personal finance, I try to reply to that queries as fast as possible. Yeah. So thank you. These are my contact details. If you want, you can contact me. This is my WhatsApp number, so you can. If I don't answer the call, you can always leave a message to me on WhatsApp. You can refer to me. So whenever you leave a message, please refer that you are part of that Ethica Work Life seminar program. You have attended my this thing, and this is my query, and we would surely respond back to you immediately. Okay. So the floor is open for question and answers. Anything that you want to.
If you have any questions, please unmute yourself and you can ask questions.
Hi Rajesh, can you hear me?
Balaram Chari sir, your voice is very low.
Can you hear me now?
Yeah, I can hear you.
Yeah. One my question is like, can you please explain about salary segregation, like how we can segregate our salary into the insurance thing, the health insurance, and other things, and what is the proportion need to be done in savings and health insurance and the other things? Can you talk on that?
Yeah, I would just try to address this in brief. This is actually a complete session that we took about 2 months back. Be your own financial planner. Okay, the recording of that would be available on the YouTube. But I would just say, okay, I will just give you in brief what exactly you need to do is uh, when it comes to your salary, first thing, in terms of your income and expenditure, first thing, always see that you start with minimum 20% of your income as a savings. So start with minimum 20% and aspire to increase your saving to 30 to even 40% at later part of the year as your income earnings increase. So that is one thing. That is 20% of your income should minimum go to your savings. Second, home loan EMI. Whenever you are planning for a home loan, see that your home loan EMI is not more than 30% of your take home salary. And if it is not more than 30% of your take home salary, it would be very comfortable for you to handle your home loan. And you can stretch someone like is in a very aggressive growth where you anticipate that okay, in next 2-3 years I will get very good increments and all. You can stretch this 30% to max 40%, not more than that. Don't go beyond 40%. I've seen people even taking 50 to 60% of their salary as EMI burden in anticipation of that, but 30% is would be a very comfortable number. Okay. Now, third thing, when it comes to insurance, what you should see is you should have one thing is term insurance. Don't go for money back insurance plans. I'm speaking about term insurance. So term insurance should be at least 15 times of your annual income, and the suggested would be somewhere around 20 times. So between 15 to 20 times of your annual income. So say for example, if your annual income is 10 lakhs per annum, your term insurance cover should be between 1.5 to 2 crores minimum. And maximum you can get around 2.5 to 3 crores, but 1.5 to 2 crores minimum. That is 15 times to 20 times of your annual income. Third is your Mediclaim. So Mediclaim, even if you are covered by your organization, it is always suggested to go for a personal Mediclaim. Okay. If you don't want to go for a normal policy, you can always go for a top-up policy where if you are covered by your organization, say for example, 5 lakhs, you can go for a top-up policy which can cover you for any claims more than this 5 lakhs. So I go for a top-up policy of 10 lakhs with a deductible of 5 lakhs. So I would, first 5 lakhs would be covered by my organization policy, and any claim beyond this 5 lakhs would be covered by the top-up policy. So you can explore the top-up policy option. That is with regard to Mediclaim. Okay. Then with regard to your investments, when it comes to investments, as I told you, always plan your investments with regard to the tenures. That what is the investment tenure? So if it is for short term, 1 year, 2 year, 3 years, always prefer investing into debt funds, debt mutual funds. Don't go for equity mutual funds or direct equity market. No. Take an exposure to equities
But
only
we can
if you
go for
want for more than
ETFs,
5
right?
years. Yeah.
ETF, exchange traded funds, you can invest in for the long term. To be in the safe side.
Your voice is very low. I'm not able to.
I think we can go for ETFs. Is it advisable to go for ETFs, exchange traded funds?
Yeah, ETFs. See, ETF in which ETF you want to go? That is what. No, there are so many type of funds, mutual funds.
Index fund.
Yeah, index ETF you can go, but index ETF is again equity fund. So you should go only if you have more than 5 years of investment.
Yeah, that is a safe return, right? We can go for long term, and there won't be any risk in it.
I would not say safe return. Was index fund only give you a return? It replicates your index. It replicates only what the index returns.
The index doesn't go downwards if we consider in the long term.
Need not be. March we had a severe crash. Okay, fortunately we again could come back to the same levels, but you can never say. And tomorrow again, like already the second wave of corona is expected. Okay, Europe is already going towards partial lockdown. And say after 3 to 4 months, you see the corona cases, the COVID cases again rising across the world, and again economy shutting down, because no country can afford people dying. Till the time, like even in our country, we are able to extend with these opening measures, no lockouts, again no closures, no lockdown, is because the number of deaths are still very low. But if the number of deaths starting at the rate how people in Europe start dying, no country can let their people die at the cost of economy. Okay, so in short term, equity investment is always volatile. So don't be in a misconception saying that if I invest into an index fund for even a short term, it is still safe. No, it is not safe. Because at the end of the day, your index will perform based on the economy and how market moves. Okay. So any exposure to equity for an investment tenure of less than 5 years is actually a big no. In fact, in current volatile market, I would say not even 5 years, I would say 7 years. But at least 5 years. Anything less than 5 years is a big no. Yeah.
So if we have a home loan 1%, so do we need is it a smart investment if I am going for FD or short-term debt or fixed deposit or even the debt mutual fund that is for the short term? Because their return is either it's the same with my home loan interest rate, or it just given below that as well. So where exactly we should invest?
Surendra, I would just reiterate your question. You mean to say if you have a home loan, should you prepay your home loan or should you invest that amount into debt funds or what?
Yep.
Okay. I would suggest, see, if your home loan is say about 7.1%. Okay. Now 7.1%, you need to look into 2-3 factors. First thing is your home loan is 7.1%. That is the interest that you're paying. Second, what is the income tax savings that you are getting on this interest that you are paying? because there is a home loan deduction that is available. So if you are under 20% or 30% tax bracket, what exactly the amount that you are savings? Okay, so that is also your incremental return only. Now, if you are repaying your home loan, what will happen is, first thing, this 7.1%, yes, you would be saving, but you would be losing that opportunity of your tax benefit. Okay, that is the first point that you need to consider. So if I have to see that what is my cost of the home loan, if I exclude my income tax, it may become at around 6%. So 6% is the cost that I'm paying. And if I'm investing into a debt fund, which can give me somewhere around 8% return. Now on this 8%, again, what is the income tax incidence on this? On this 8%, the income tax incidence would be 20%. Long-term gain, 20%. So if it is 20%, what is the amount that I need to, what is my return? It would be again 6.4%. So if I'm investing in debt fund, I'm hardly getting any better return than my home loan repayment. Okay. Yes. If I'm fine with taking exposure to equity for a long term, and I don't have major my cash flow issues or anything, then in a long term, the equity may give you a higher return than what you would get a return by repaying your home loan. So it is all depends on, first, what is the kind of return that you're targeting for. If you're targeting for FD and debt funds, then repaying your home loan would be a better option because it is almost similar. So you need not take that additional risk and all those. Your income tax calculation higher risk, and you are open to take an equity exposure, and you want a return of 10 to 12%, then you can continue with your home loan and start an SIP into a equity fund. But again, I said equity exposure should be only if you are prepared for more than 5 to 7 years. I hope I'm clear.
Yeah, I mean, we are getting the home loan interest on the income tax benefit as a, that is also one kind of return. And yeah, I agree that these FD and short-term debt mutual funds, these are not very good when we compare for the repayment. But even if we go for the longer one, if we go for the multi-cap or large cap funds as well. So in that case, yeah, they are giving the good return, but that's a probability. I mean, we are expecting that, yeah, that can give the, but that is not sure, right?
That is what I said. No,
but
if you are prepared to see, if you want to play safe, then repay your home loan. I would put it straight. If you want to play safe,
yeah,
repay your home loan. No, boss, I want a higher return because life में थोड़ा risk तो बनता है, boss.
So
okay,
can we make a kind of, let's suppose I have 100 rupees, so 70 rupees I can pay it on my home loan, and 30 rupees, yeah, let's go for put it into the large cap or long term equity funds, so that I can get some better return, and then I can again adjust it with my other goals.
yeah, that is all. That is what I said. It's your personal discretion. So that's why we say no. That financial planning, personal finance is all depends on your own personal discretion, because it depends on your approach for life. If you are a very risk-taking person, we got people like. I would just take a minute. Just about a month back, one of my client, she sold off her property. She got about 60 lakhs. Out of the 60 lakhs, she's sitting on an education loan for her daughter, because her daughter went abroad and they took an education loan of about 1 crore. So she asked me, and they are paying about 10.5%. Okay, 10.5% on the education loan. So should I repay back? I said, yes, please repay back, because 10.5% is a very good return. A risk-free return, you're getting 10.5%. But instead of repaying back, she repaid back only 30 lakhs, and balance 30 lakhs, she said, I would invest into stock market and will generate higher return. So even a lady, she was like, no, I want to take risk. I will directly pay. And she's our client, and she's actively trading into stock market. And thankfully, till now, she has generated good return. But my preference, personal preference, had I been in her place, I would have paid my entire 60 lakhs there. Because 10.5% is a very good return, boss, tax free. Okay. So it's all about your personal choices. As an advisor, we can only say ki, if you do this, this is what the impact. If you do this, this is what the impact. At the end of the day, when it comes to personal finance, it should be always your decision, and you should learn to take responsibility of your decision. Okay. Yeah.
Rajesh, I have another question. The thing is like, is it advisable if we purchase a home and pay the EMIs, or else we can purchase a home after the 30 years, which would be the best as per your consideration?
Purchase a home and pay EMI are?
Or purchase a home after the 30 years, what is the best thing? Why? Because why I'm considering is like,
Was your wife, is your wife around?
no, I am single.
Okay, thankfully, because I have got a lot of scoldings from many of the wives for actually discouraging their husbands from taking a home. Okay, that's the reason I asked you if your wife around. Okay, see, personally, I would always choose that I would buy a home only when my own personal net worth is almost equal to my home. That is, I got a 1 crore amount. I want to buy a home loan, a home. Then it's my choice whether I should put the entire 1 crore into that home, or I still keep on investing this 50 lakhs out of the 1 crore. I take only 50 lakhs loan. Okay, because I already have money in hand. But I would not prefer going for a home by taking a home loan where my personal net worth itself is just 30 to 40% of the home amount. मेरे पास 20, 25, 30 लाख पड़े हो और मैं 1 करोड़ का घर जाऊं. Okay, that is one thing. So I always prefer, let me save, let me accumulate money and then pay, because at the end of the day, if you buy a house, the kind of return that you get is far more lesser than in your, even your debt funds give you a better return than your return that you get on your house. So paying rent would be much more better. First thing. Second thing is, buy a house only if you know that it would meet to your requirements at least for the next 15 to 20 years. That 15-20 साल तक इस घर से कोई problem नहीं है. Okay. Like personally, as I showed you, I've got 2 daughters. Okay. Now, once my daughters come to their higher education, obviously they would hardly stay with me. They would go to their colleges, then they will get married, they will work. So they would barely stay with me. So today, if I have to buy a house, I need to go for at least a 3-bedroom flat minimum. But the same thing, if I buy a house after 10 years, for me a 2-bedroom flat would be more than enough. One for me and one for my guests, because my daughters are also going to be my guests only after 10 years. Okay, this is where I think. So I'm just telling you how I think, and so it is your own personal choice. Finally, whether you want to go for a home loan or you want to save, accumulate money, then buy a house. And even then also you may choose to go for a home loan. If your home loan is very cheaper, continue your investments, but at least you will not have a headache of having a home loan, because a headache of having a loan, and especially during this COVID times, many of my friends have experienced this, and they have at least 5 to 6 of them has come back to me and said, "Ki boss, तूने बचा दिया," because either they have got the pay cuts and 4 of them have lost their jobs. So today paying their EMIs would have been much more headache for them. Yeah. I hope I'm clear to your question.
Yes, you are very clear.
So if you have any other questions, it's fine, or we can end the session.
Hi Rajesh, I have a query. I made it sound a little weird, but I think like if I want to buy a 1 crore house, right, a flat or something,
Yeah.
is it better to go and buy that or rather live on rent?
Are you sure you're going to retire in the same city where you're going to buy a house?
So you mean to say like I will be settling in the same city?
Yes.
Yeah.
If
Most
you
likely.
are very sure that you would be, yeah, most likely, because no, at the end of the day, it's always conditions apply once.
Right.
इसका दाना पानी कहाँ पर लिखा हुआ किसको पता है?
Yeah, but our expectation, our planning is something
Yeah.
we have to go for.
Yeah,
Yeah.
but at least you can say that okay, if you retire in the same place, okay,
Mhm.
then you can always go for house, because what happens is many times I've got friends who have house in Hyderabad and they are currently living in Mumbai, or again same, they are working in Hyderabad but they have a house in Mumbai.
Okay.
Okay, so this is what happens. So because currently service class people, they are very mobile, they have become Marwadis.
Right.
Earlier we Marwadis were mobile, कहीं पर भी जहाँ पर धंधा पानी हो वहाँ पर चले जाते थे. Now service class are the new Marwadis, they can go to any place now for their jobs. Okay, so that is the way. So if you are fine, if you have like it is not stressing your finances and you are very sure that the house that you are going to buy, you are going to stay there even after retirement, it will meet your retirement needs, it will not be big or whatever it is, fine, then I would suggest you to go for a house.
Okay, won't that be an investment if I just buy the property and let's suppose I start living in the city itself, right? And later on, if as per the conditions, I may have to go for some other city. Or when I'm living in here only, I will be paying the rent almost that much the same, almost comparable to the the interest I have to pay, right? Every installment.
केशव जी, 1 करोड़ का घर अगर आप रेंट पे दोगे तो कितना रेंट आएगा?
I think, I mean, depends on the place also, but yeah, usually it goes for 20.
आप जहाँ पर सोच रहे हैं, that is it depends on the place, but you would have already have a place or a house in mind, no?
Right.
तो वो एरिया में कितना रेंट होगा? 30,000 रुपए.
Yeah, right.
So what is 30,000 on 1 crore? 3% return.
Okay.
3% return. And what would be the property appreciation in long term? Residential property doesn't appreciate much. It appreciates only in the first 4 to 5 years. After that, it doesn't appreciate much. Isn't it?
Yeah, that is something I never.
Commercial properties always appreciate. Commercial properties based on the location and all, they appreciate. And the rental income is also higher.
Okay. Right.
Okay. So 3% would be your rental yield. What we call is a rental yield. So 3% would be a rental yield. Okay. 5 to 6% can be your capital appreciation. So overall, you will get a return of 8 to 9%. फिर उसके बाद आपका किराएदार की मगजमारी कि सर ये रिपेयर आ गया, छत से पानी लीक हो रहा है, ये टपक रहा है, वो टपक रहा है.
Yeah, the whole maintenance thing also will come into the picture.
Yes. Okay. Than that, I would tension free invest into a debt fund. 8-9% return I will get there. Or partly invest into debt fund, partly I would take a risk, put into my equities, I will get 11-12% return. Okay. No, choice is yours.
Yeah, but I mean, like that's. I wanted to have a look on the whatever the factors will come into picture, right?
So that is what. See, thing is, the whole issue is in India. No, basically we take financial decisions emotionally. We take financial decisions emotionally, not logically. We should always think logically.
Actually, it's not about emotional. Also, like people don't get the big picture. Down the line, whatever the factors will come into account, not everybody has the visibility.
Yeah.
We have not gone through the stats.
Yeah, because we have not been actually financial literacy. See, one of my personal missions, my personal goal. Okay, Samina, I'm not sure if you mind me sharing this, but one of my personal mission is to make every Indian a financial literate. One of the things that actually keep me inspiring and keep me going to conduct this kind of sessions and do, I even talk to a lot of kids, I talk to everyone and try to share this. My whole mission is to make every Indian a financial literate, because we have forgot the age-old wisdom what our parents nurtured and gave. Somehow in the last 2-3 decades, after especially this IT revolution, okay, the last 2-3 decades, somewhere we have lost that old things, old wisdom which we have completely forgotten. And what all I said, no, in today's session also, there is nothing new that I have invented, or it is scientifically somewhere this thing. अपने बाप दादा जो सिखा के गए हैं ना, वही आज मैंने सेशन में बोला है, और कुछ नहीं बोला है. गुप्ता जी, आपने सुना होगा, जितनी चादर हो उतने पैर फैलाने चाहिए.
That's the first thing, yeah. For every economy understanding planning,
Yeah.
that's the first one.
We have been always taught कि once you start earning, first save a penny and then plan your expenses, isn't it?
Right.
But we have forgotten. We have actually reversed it.
Yeah, the commercialization is good.
Our forefathers, our parents, when they used to plan for their homes, they used to plan for their home somewhere around retirement, isn't it?
Right.
Because they know, abhi pura all my responsibilities have been done. Now let me have my retirement home, enjoy me with my wife, वरांडे में झूला लगा के चाय पीते, पेपर पढ़ूंगा, और फिर इंडिया के पॉलिटिक्स के बारे में चर्चा करूंगा.
Right.
Okay. So these were all our what we have seen our parents do. But suddenly now all this, because so many this greed, suddenly it is all these new things. No, it is out of the greed. Now people have slightly become greedy. Yes, no doubt. Nothing wrong in being greedy, boss. At the end of the day, paisa kisko acha nahi lagta.
There is a difference. Greed and the lust. I mean, it's all about, you have to see clearly what you are getting back. Are you ready for it or not?
Yeah.
Yeah.
No, greed is not just in return. I would say there are two kinds of greed. Greed in terms of return, greed in terms of lifestyle.
That is actually what pulling people around these days.
Okay. We call it lavish lifestyle, but now we have actually become in terms of, I would say, greed, jealous. उसके पास iPhone है, मेरे पास भी iPhone रहना चाहिए.
Right.
I had one client who took a personal loan for buying an iPhone. Okay.
Rajesh, I have a personal question for you. If you don't mind, can you please share how you invest your investments and the way do you get the returns?
We can have it on personal window in WhatsApp, not on this session. Okay, not on this platform. We can have it personally. Anyway, I think we will have to wind up because there is another session now which is lined up. Okay.
Sure.
So thank you all. If there is anything, you may please note down my number. You can, Balramji, you can actually note down my number. You can contact me there. Okay.
Sure, thank you.
And thanks for spending your valuable time today evening. I hope it was fruitful and time well spent.
Yeah, it is a great